Hey traders, in today's video, I'm going to share with you a tip that helped me get a better grasp over my trading. Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradingPower.com, and thank you for joining me for another weekend review video. Today, we're going to do a follow-up on last week's trading video, looking at a trade that I took this week on the euro dollar, and then looking ahead to the new potential opportunities that may exist. But first, I wanted to share with you guys a lesson that I learned early on, early-ish on, that helped me really get a hold on my trading. And it started in our Monday Q&A session. Each Monday, we hold a private training session for our transformation members. And in this particular session, we had a client that was struggling with some of the material that was being taught. Now, I don't mean struggling, meaning it was confusing, but there was so much of it that they were becoming overwhelmed. They were learning this, learning that, and how do I use this? Where do I use that? And in our understand, the goal is in our training courses to teach you everything we know about training, or trading, I should say. However, what I advise to our clients is that you start off small, choose one style, master that style, and eventually add other tools that you can use to evaluate the market. So don't try to be a trend continuation and a counter trend trader and an advanced pattern formation trader all at once. Pick one, master one. Once you master one and you're able to become profitable, then learn the next. And one of the things that I said in this session was, if you're everywhere, you're nowhere. Meaning that if you're all over the place, you don't really have a center focus and you really don't have a set trading style that can help you achieve consistent profits. And that idea, although we were talking about specific trading strategies and techniques, that idea also goes to how you analyze a price chart. There are many traders out there that have no portfolio, meaning they don't have a set grouping of currency pairs that they trade. Rather, each and every day they come into the market, they go on the side deal of TradingView or whatever platform you're using, and they go through every single pair possible, just hunting for opportunities. What I've found in my experience is that when I get in a consistent routine of just doing analysis, not necessarily looking for trading opportunities, but performing general analysis on the same pairs in the same way, each and every day, it actually allows me to see much more than if I was just going and hunting for a specific trading opportunity. And that's kind of how the trade that I'll show you next came about. It started with the analysis that I did in last week's weekend review. And as I did more and more analysis, as I stuck to that ritual, as I stuck to that routine, I was actually able to find a really good trading opportunity that I may have not seen otherwise. So check out the video. It's a trade I took on Sunday, and it's still partially in progress right now. And when we return, we'll do some more analysis on that very same pair. And I'll give you an example of how I go about doing my analysis and looking ahead, I guess you can say, looking to see what's next. So check it out. Hey traders, Akil here. It's about 3 o'clock on Sunday, so a few hours before the open for our week, and I have a trade that's on my radar. If you remember, Thursday, I put out my weekend review video looking at an opportunity on euro dollar. I posted it here on TradingView as well. It was the day before our non-farm payroll release, and we're looking at the different opportunities using our if-then thought process. If price action went bullish or had a bullish reaction to the news, then we could look for that advanced bat formation. If price went bearish, then we can look for a potential 26.18 setup. And well, we had a very nice close Friday. If I go over to the live charts, and again, price isn't moving right now. It is Sunday. The markets won't open until about 5 o'clock or so. But we had a very nice close to Friday's candle here. You can see we ended up right at previous structure support. If I draw a line right here, right at a little minor support level. If we look left, we have little structure zones hit there as well. We also have a one-to-one measure move. It looks, let me just see. This is a one-to-one measure move, also known as a ABCD pattern. We can call this an equal measure move as well. You can see, yeah, we just put in an equal measure move as well. And I bet we have some Fibonacci confluence. This looks like a 1618. Let's see. Yep, 1618 Fibonacci extension, and didn't hit exactly. We do need those exact hits if we're talking advanced pattern formations, but as far as general analysis goes, you got to work with zones in the market. It's not always going to be a precise hit, again, unless we're talking rules for advanced pattern formation. So we come down to a one-to-one measure move. We have the 1618 extension as well, and price action gets rejected at this level. We see some buying pressure before Friday's close. We also close above what looks to be, we close right above a 1618 Fibonacci inversion as well. And again, if you look left, that level is going to line up with our previous structure. So depending on how we open, assuming we don't gap up, I'm going to be looking at a buying opportunity right here on the open, seeing if we can get something where I can get in that market on the open, look for a retest of structure as far as targets go. And then as far as secondary targets go, for I guess non-syndicate trades, that we only take one in, one out in the syndicate. But secondary targets, we're going to be looking at a move back of the previous structure right up here. So a pretty decent risk reward. Not best, we've seen better than this, but it's more than a one-to-one. So anything more than a one-to-one is perfectly fine with me. And of course, this is one of those scenarios where I'll be aggressively managing it, meaning trying to get this stop loss and shrink it up as quickly as possible. Now, as quickly as possible based on my rules for trading, not just based on my feelings. I'm not going into this saying, hey, we got 10 pips up, I got to lock in profit. No, we have strict rules for when we trail our stops, but as always, looking to manage risk at the best opportunity, because I don't like taking losses. I don't like having risk at stake. So the quicker I can get this to break even and have a pain-free trade, play with house money, the happier I am as a trader. All right, just wanted to give you guys a quick update. It's Tuesday, so about 2 days since this trade has been active, and we've really seen zero movement in the market. It's an interesting week. We had a big week last week with the interest rate cut and the non-farm payrolls. It's also the second week of August, so it's a big vacation month, and looks like the market is taking a vacation as well. So not much of a reaction here on the euro. We saw a little bit of a bullish move today, enough to allow me to roll my stops up and really right under this area of consolidation and minimize my risks. So although I haven't been able to take any profits off the board, I have minimized my risk, leaving me less exposed. And we'll see if we get a follow through to that 1150s area, that 11150s area. But I'll keep you guys updated, and this is just trade management for you. All right, traders, so we're back on euro dollar. Now, as you can see, we did move up to take down our first profit target. Stops have been moved to break even, a little bit past break even, just to ensure that we lock on profits for the second half of our position. And what I mean by this is once we snag some profits, once we put some money in our pocket, we never want to give any of it back. Look at that. Charles just banked, for you guys on the trade floor, Charles just banked about 42 pips as well on Aussie New Zealand. Good deal. It's a nice night. So for my personal trade, looking for second targets up at a retest of previous structure. I'll get these up here as soon as we're done the video. In the syndicate, we only take one in, one out, meaning only single targets. That way we keep things simpler and we have a chance to look at more trading opportunities and not really hold any positions for a while. Again, it's an educational program, so the idea is to show you as many different trading opportunities as possible without forcing them, of course. And the next opportunity here on euro dollar is going to be a potential cipher formation. If I take my Fibonacci retracement tool and I drag it from my swing high up here to my swing low, we're looking at an advanced pattern formation that will look like this: X to A to B, B to C, and then a CD completion right here. So I'll shoot this into the trade floor right now, I guess, and our next shorting opportunity here on euro dollar, for the syndicate at least, is going to be at 111.93s. Again, I'll be looking for potential targets up at a retest of structure here, and then if the cipher is still valid, stopping and reversing and involving myself in this bearish pattern formation as well. So good deal. That's 2 for 2 thus far this week. All right, another update on our euro dollar trade. You can see price action has been active overnight. We've been moving up, testing previous structure highs yesterday, banking us some profit. A little bit of a relief. You can see some profit taking up here, and then finally breaking and closing above that previous level of resistance that we looked at right in here. So that allows me to do this, take my stop loss and just move it up even further, banking some more profit in. And that's the game, guys. That's called trade management. One of the things that I noticed in my trading is once I got to a certain level, I didn't get too much better with execution. And I don't mean to say that you stay the same forever. I have gotten better with identifying trades and just knowing what are good trades and what are bad trades. That's just going to come naturally with time. It's like driving a car. The more you do it, the better you get with experience. However, one of the things that I've noticed that has gone measurable ways to helping my profitability has been the management of positions, not just letting those positions that go south take you out of all your profit, but continuously locking it in as the market goes up, especially when you're shooting for these extended moves. So locking in some profit here. Wouldn't be surprised if we have a retest of previous structure again, which once was resistance was now broken, should turn to support. So wouldn't be surprised if price action comes back to this level and then shoots back up and continues higher to our cipher formation, or hopefully our ultimate structure level up there that I'm looking for. But worst case scenario, again, we've just banked in another, I don't know how many pips of profit, but whenever you can move that stop loss up, that's a good thing to do. All right, back once again. It is now Thursday morning. You can see we've had a little bit of a retracement on our euro dollar trade. My stop loss is right below previous structure right here. So we're looking to see if this structure level can hold, and still looking to get a continuation higher to our previous level of structure up here around, I think it was 112.20s, around that area. Pretty neat though. If you guys remember the last video, we talked about two different situations happening. We had, I have the longer term position that I've been holding all week on my personal account where I'm looking for target twos. However, in our syndicate program, we do a 1 in, 1 out strategy, meaning that we only take a single target. That way it opens us up to more trading opportunities. And this is a pretty cool example. We did have the cipher formation that formed, X to A to B, B to C, a C to D right up here. Lo and behold, our cipher this morning or last night rolled over to achieve target ones as well. So made some money in the syndicate, and my other trade didn't get stopped out. So it's kind of like you're double dipping here. It doesn't happen often, but pretty cool how that works out. So still holding this position. I'll keep you guys updated if anything else happens before I record this this week's weekend review video. But it's been a pretty decent trade so far, not only personally, but even better for the syndicate, because we had the big winner on the initial target level right around 111.50s. And then we just basically stopped and reversed and got another 50 pips on the way down to cipher formation. So pretty cool stuff. Probably my favorite trade of the week. My best trade of the week. We didn't even talk about this, but pound dollar yesterday, if you guys remember, if you were in a live room or if you were paying attention to the syndicate trade floor software, I shot this in. We're looking at a double top back up in the previous structure resistance. We're with the direction of the underlying trend. Again, we know that because we do our IPDE process each and every day. We stick to that routine and we really get a chance to understand and know each market. And we got short in the live room and essentially a pain-free trade. We came all the way down to initial targets, which, you know, we're about 100 pips later. So pretty cool trade, pretty pain-free. Not as exciting as the euro. Doesn't make for as good of a training lesson, which is why I want to share this one with you. But pretty decent week so far. Can't complain. All right, gang, so we're back. Still looking at the euro dollar, and as you can see, I still have that partial position floating out there, seeing if I can get my my extended targets hit. But even though I still have a position on the table, I still want to do my analysis on this pair. That way, I'm prepared to handle whatever the next situation is. And at this point, I don't know. We're right between two structure levels. The market's going to tell me one story if our resistance level here is broken. It's going to tell me another story if our support level here is broken. And it's not my job to kind of guess and tell the market which way it's going to break out. It's my job to be prepared on how to handle it either way. So, it's something we call our if-then thought process. If price action creates a lower low, lower close, then I look for a potential entry here. If price action creates a higher high, higher close, then I should be thinking trend continuation. The market is continuing higher. I'll look for my next counter trend entry here. And again, it's not necessarily looking for an entry reason specifically. It's more about doing general analysis. And if we do that general analysis consistently enough, and if we do it the right way, the trading opportunities are going to fall in our lap. So here's an example of something I would do. I would look at this pair right here and I would say, all right, well, let's take our Fibonacci retracement tool. Let's draw it in from our swing low to our swing high. See what we get out of here. Boom, you can see we get a 127 extension right up at this level, 112.32. Look left, structurally as clues. Well, what do you know? That Fibonacci extension level lines up right with another level of structure. I can then take my Fibonacci extension tool again, use it in a different way. We call this an inversion where we draw it backwards. But look at a Fibonacci inversion and look at that. We've got a 1618 there as well. And if I eyeball this right, again, let's try this. One more Fibonacci inversion from our previous swing low to swing high here. There we go. Look at that. We have a Fibonacci cluster right at this level of structure. So I know that this may be a level that I want to pay attention to in the future. I've got obviously structure looking left, previous structure highs. I've got a 618 Fibonacci inversion, two of them, as well as a 127 Fibonacci extension at that level. So I could make the prediction that if price action goes higher, then we're likely to test this level. And if we're likely to test this level, this is a counter trend trading opportunity where I can enter aggressively. You can do a lower low, lower close. If you're a conservative trader, say do something like this, wait for a double top with RSI divergence and look to trade it back down into previous structure support, right? Let's say price action breaks out to the low side. Let me just delete. I should have kept, well, doesn't matter. We'll delete it all. Let's say price action breaks out to the low side. Our support level gets violated. Same thing. I can use that if-then thought process. Let's take my Fibonacci extension tool again. Let's draw it from this swing high to this swing low. This is the most recent one we have. And back up. You'll see I'll get a 127 extension right here. This lines up with previous structure looking left right in there. And we have a 1618 Fibonacci extension lining up with structure right here, as well as structure right here in this little consolidation level. Right? I can also take my Fibonacci retracement tool, drag it in from our previous swing low to our swing high. See what we get? Look at that. We're going to get a 618 Fibonacci retracement lining up exactly with that 1618 Fibonacci extension. And that is known as the golden mean. The 618 and the 1618 are the golden mean and the inverse of the golden mean for you guys that are familiar with Fibonacci levels. So I can start saying, well, if price action comes down here, I can look for my next bullish entry in this level of consolidation, starting at our 618 retracement here. Oops. And coming all the way down in this area. Or if price action breaks below, right, I can look for a retest of structure, an opportunity to get short right here in anticipation of that level getting hit. And this is all called the IPDE process, identify, predict, decide, execute. And it's something that we do each and every day during our top-down analysis. So it's a routine we put ourselves in. We go through the same time frames. We go daily, 4 hour, 1 hour, IPDE each and every day. And we really get a feel and a really good understanding for what each price chart is doing. And that's something that's hard to get if you're just aimlessly clicking, whatever, Euro New Zealand today, silver next day, right? The DAX another day, New Zealand, Canada, right? If you're spending your time going through all these random pairs, you never really get a feel for any one of them. You're just hunting opportunities, and usually when you're hunting, you're going to miss a lot. So I think it's a better idea just to do general analysis, and that way the trading opportunities, they're going to fall into your lap. They're really going to stand out to you. At least that's how it's been in my trading career. So that's a good example of it. We can do some more here. There's a potential, some of you are probably screaming, Akil, what about the Gartley pattern? There's a potential advanced Gartley formation down here as well. If we look at something like this, X to A, get the right tool here, X to A to B, B to C, C to D, if we zoom out even more to the 4-hour chart, there's a potential bat formation looking something like this. Again, we can do this forever on different time frames, and it's all going to be the same. It's practice, 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 reps, reps, reps. It shortens your learning curve and gives you a better understanding of the market. So speaking of learning curve, I did get a request last week to show you another example of that equity curve. I understand that the colors didn't really turn up too well on the video. So give me a second. I'll load up our most recent equity curve here in the syndicate program. All right, so here's a look at our syndicate curve. We have a few different ones. Last week I showed you guys you really liked it, the one with the 3% and 5%. I can if you want me to show that again, just let me know and I'll do it in a future video. But I think this is a pretty cool one to look at. This is our 2015 versus 2016 equity curves, and it's always cool looking at different years. What I found in my personal trading career is that I've been a pretty consistent trader year after year. I average about 3% a month before I take any money management into account. I would say at the end of the year, I return anywhere between about 35 and 45%. And then again, you put some money management in there and it ups it quite a bit, but that's typically what I'm at before money management. Now, with that being said, each year has been totally different on how I've gotten there. It's not always the same. Some years have been very, very hot in the beginning, and then I completely cool off by the end. Other years I've been cold, ice cold in the beginning, and then catch a heater at the end. And that's just how trading goes. So I think it's cool to see this. We started off this year essentially kind of in the same direction as last year here in the syndicate, and then we hit a little deeper of a summer blues. Last year we had a longer drawdown as far as time-wise. We had a drawdown for about 20 weeks, I believe, but it didn't go as deep. There wasn't that much of a maximum drawdown. This year, the maximum drawdown has been a lot bigger. However, the drawdown in general, the time period of it has lasted shorter, and really over the last 4 or 5 weeks or so, we've been on a heater. Again, we had that one really, really bad week here where I think we were 25% win percentage. I forgot how many pips we lost that week, but it was pretty bad. It went from I don't have the percentages in front of me, but it was a pretty bad dip. You can see it's going down at a very sharp slope. It's not a good thing. But after that, we've been able to, strap up the boots, get our act together, and ebb and flow our way up. But again, if you notice, even during the hot streak, and this is what we call a heater when you're on a hot streak, we've been about 70%, a little less than that. Even during the heater, right? Is it going straight up? No, it still ebbs and flows. We still go up, and then we go a little bit sideways, then we go up, and then we give some back, and then we go up, and that's just how trading works. So for you guys that have trouble dealing with drawdowns, that find yourself getting mentally unstable, just understand your equity curve, even if it's going in the right direction, which is bottom left to top right, it should look like a trend. It's not going to go straight up. It's not going to be a straight line. You're going to have good weeks, good months, and you're going to have ones where you give some back. What's key is you don't give back as much as you make. Just like any good trend, right? The extension of the trend should be longer than the pullback. And as long as you're continuing to do that, then you're going to be on the right side of the market and you'll eventually get to your goal. So it's pretty cool. We'll see if we can get up to last year's highs. Last year, we kind of took off in September. I have no idea what to expect. We could match it. We could do much better. We could do much worse. Who knows? All I know is we had a really good week this week, banked about 300 pips, and we're moving in the right direction. And all we can ask for is to continue to take good trades and trust if we take good trades, everything will line up at the end of the year. So thank you guys for checking out my video. Once again, like, subscribe, share. Make sure you're on our email list, guys. Head over to tradingpower.com. Click that Learn to Trade tab. Make sure you're on our email list. Some of you have been getting invited to special webinars. Those of you that are on our list, some of you haven't. So make sure you're on there so you don't miss any free training that we give out. And I'll see you guys next time. Take care.
Just a After you